30 seconds on QBE, because we get lots of requests about it at all. I think QBE has been going down for as long as I can remember. It went down again today.
Warren Buffett is the genius on insurance globally.
Yes.
You know, he really is. He's gifted in that area, and he's made the point that, you know, the best measure of a changing climate in the world is insurers and their losses.
Yes.
And we're seeing more and more losses. It's going to be much harder to make money out of insurance going forward if you're one of these catastrophe type insurers or a reinsurer.
So still avoid it.
Well, intrinsic value's been declining since 2007. The expectation is that there's going to be a hockey stick return and it's going to start going up, but that hockey stick keeps getting lower and lower.
I think that's some good comments. Thanks for that, boys. Call 1300 30 34 35 or send us an email at yourmoney@skynews.com.au. Thanks for waiting on, Leslie from Sydney. What's your question for us tonight?
Evening all. Look, I'm interested in Fleetwood and I'd like to know the panel's view on its current price and what they think about its future.
Great. Thanks very much, Leslie. Look, I know Fleetwood has been a very good performer over a longer period of time, obviously not recently, but Roger, I think that might have been one of yours at some stage.
Well, during the GFC, I was an owner of the shares and around $3.50, which is a long time ago. But once the shares rallied above that $11, $12, they were expensive again compared to my estimate of their intrinsic value. So I confess that I sold my shares at around $13, and I had some guys in the office who sold closer to $14. So they like to mention that to me, that, you know, that they sold at a better price than I did. One of the reasons I have to confess for selling it was that I'd started a new fund, and so I'm going to have all of my share investments in the fund rather than outside of the fund. But it was expensive, and I've got intrinsic value now at around $10, and in 2013 it'll be around $10. So it was expensive at 14. It's a terrific business, you know, it really is. Basic business. Two parts that I like. One is the caravan business. They're the second biggest manufacturer of caravans in Australia. So that whole demographic avalanche or generational avalanche that we've got, the grey nomads, there's a business opportunity there. But of course, they build dongers, which, you know, sounds like a dodgy name, doesn't it? But dongers are the portable housing, the portable accommodation that builders on mine sites live and work in and meet in. You know, the air-conditioned units, and they build those. And they've done very well out of that mining boom. But this is a business that pays most of its earnings out as a dividend. So in order to increase its intrinsic value, it has to increase its profits on the same amount of capital. And at this stage, based on expectations, the intrinsic value is actually going sideways for the next couple of years. So where would I buy it? If I could buy it at $7 or $6.50, that would be of interest to me, and you get a very attractive yield there as well.
Excellent. Good to hear that you've got your money where your mouth is. I always like to hear that.
Osco? I can't remember the name of it. They're another supplier, more in civil, I guess. Civil, again, sorry to use the expression, dongers. But just remember, when you hear the press talk about competitors to these businesses, they're not new competitors. They've been around a long time. So it's a fairly stable industry.
I'm pretty sure dongers only male accommodation though, isn't it?
I'll leave that one with you, Chris. I'll stick to the stocks.
Just stick to the stocks.
You keep going with the jokes.
We're going to go to Brian, who's waiting on patiently from Perth. Hi, Brian. What's your question for us tonight?
Yes, could I get intrinsic value on QBE, please?
Yeah, listen, thanks very much for your question there, Brian. We did just do QBE a second ago, but we might just do 1 second. I think Roger said it was right down at $14. Yeah, so $14.78. And also Michael just commented he thought that he'd be waiting for the stock to turn around and that insurance might be under pressure for some time to come. But look, another one we get multiple questions about, of course, BlueScope Steel, which luckily, hopefully you've been listening to all of the guests on Your Money Your Call the last couple of months and been avoiding it. Another new low today. I think BlueScope is now $1.19. It's fallen at least from $2 over the recent times. And a lot of that has been to do...
Still nowhere near its intrinsic value.
Well, this is what I was about to ask, Roger. So, I mean, you know, currency's been a big problem with it. Massive steel producer. What's its intrinsic...
One Steel, you know,
One Steel, the whole sector?
The worst possible superstorm, you know, hitting them. Low steel prices, high commodity prices, terrible currency situation, and I've got an intrinsic value of 45 cents, going to 99 cents in 2013.
Okay, that's even worse than I thought it was going to be.
And they're not investment grade either. I should say that they're on the cusp of being investment grade, but they're at the lower end of B3.
Okay, indeed, which was up about 3.5%. Now, I know Monodelphus, I think, might have been on Roger's radar. So what about Monodelphus? Because I know I like Worley and has been my sort of pick in the sector. And I think last time we discussed this, Roger, I think you were saying Worley looked too expensive, but Monodelphus was better. Something along those lines.
Well, that's true. I think out of the two companies, both of them are very good quality businesses.
Yep.
They are both expensive.
Yep.
And so for that reason, I actually think I would prefer to own a business like Forge, maybe Decmil, although is a little bit expensive now, and Matrix Composites and Engineering, in the oil space.
Yep.
I prefer those businesses. These are great quality businesses. I've heard people say that they think Forge is the next Monodelphus. That may be true. They are certainly an A1, A2 business.
Right.
So I think there are some smaller players in this space that offer better value and are very good quality as well.
Yep. So I'm sorry we can't help you on the back of that. But one thing that I probably will start with, Roger, though, is just talking about the Australian currency.
Oh, gee, I thought you were going to ask me about the Iraqi
tell us about
I don't know anything about it, but Roger might.
No, any good Iraqi food you've eaten recently?
I'm an adventure traveller, but that's just a little bit too much adventure for me, so I haven't looked at the Iraqi dinar at all.
What about our currency?
I would actually just suggest that on Google, the caller types in Iraqi dinar research or Iraqi dinar forecast or something like that, and see whether there's somebody in the world that's offering some suggestions about what might be happening there. That's all I can suggest.
Yeah, no, that's fair enough. I constantly get asked about Rio. Came out with more news again today. They've brought back some more capex 6 months earlier than expected. They're expanding their Pilbara iron ore operations as fast as they can. So now we've got BHP, we've got Rio, every man and his dog trying to get that supply side on. The Japanese have just signed up for 3 months at $170 a tonne on the iron ore price for the next quarter. Rio's still $80.
Here's the really interesting combination of things. Intrinsic value for Rio right now is much higher than its current price, but it's declining at a very fast rate into 2013. So I've actually got 2012 valuation of about $113, but 2013 valuation of 86. I don't like buying businesses whose intrinsic value is declining.
Yes.
I'd rather take the lowest of the three valuations out 3 years and say, well, that's going to be my likely return. Given I'm buying businesses, and I think in the short term I can't predict prices, but in the long term price tends to follow value, so I'm going to take the lower of those valuations going forward.
Okay, I think that's quick one.
Quickly, I agree with Michael's comments. I'd just add that I think BHP offers a better potential return than Rio.
I think that's a good comment. Great, thank you very much for that, boys. Great stuff. Look, that's all we've got time for today. So thank you so much to our guest, Roger Montgomery from rogermontgomery.com.